and thanks for joining in. Today we have a very special session for all our partners of JM Financial IFD Group partners across India. All my friends, colleagues, this is a Saturday morning, and of course we have some time to think and learn something different. So, which is where innovation is one thing which happens. If I take your mind share for a second, slightly away from the main topic, if you know, many of the people who are funding startups and all, they spend their Saturday mornings discussing or understanding the new concepts and all from the budding entrepreneurs and innovators. So probably it's the best time we all spend a couple of minutes or an hour or so with one great brain who happens to be amazingly learned, holding some designations, holding multiple qualifications, and of course a great human being and undoubtedly a very close friend, Mr. Arun Sundaresan from Nippon Mutual Fund. Arun has almost 2 decades plus of experience in our industry. He has played multiple roles, be it sales side of it, be it the relationship management, be it the product management, fund management. He has co-headed a fund, quant fund of Nippon Asset Management, and of course now he's managing one more additional responsibility of investor relation, where he is interacting with many people outside who can be prospective investors and everything. So he's doing multiple roles. He has seen all part of it, and he's there with us to impress us with his oratory part and of course the knowledge which he has attained over the years, over the period. And one of the agenda which we are going to seek his attention and time and wisdom is Nippon India Innovation Fund, which is a new offering from a fund house which does not believe in coming out with many NFOs. So if something is coming out from Nippon Mutual Fund as an NFO, we should be very keen to know why they are launching it. There must be some reason behind it, and especially when it is a thematic fund. So without taking any further pointers from Arun's talk, let me just invite Arun once again. And Arun, welcome again to our partners call, and over to you. We look forward to thoughts and ideas from your side.
Thank you very much, Anjanaya. They were very kind introduction. And very happy and pleased to talk to your team and the stakeholders. And thank you very much, for them to join us on a Saturday morning. But like you said, Saturday is a good day to kind of reflect, especially try and learn new things and kind of think through what could be the possibilities. So that way, hopefully, the session will be useful to all of us. We can learn from each other. So like Anjaneya said, the agenda is to talk about the new fund offer, the Nippon India Innovation Fund. So normally when we make a presentation about a fund, whether it is new or existing funds, we usually talk about markets. We set the market context, and therefore we talk to you about why, therefore, this product could make sense and why you should possibly consider investing to this product now, etc. But in this presentation, we'll talk more about, in fact, we'll hardly be talking about market. Instead, we'll be talking more about what this fund itself, what it tries to do, what does innovation mean, and what is the scope, and therefore, what kind of benefits you can look at. And we will not talk much about market, possibly also because the theme is such that this is not really a market-related kind of a product, so to say. We really look at this from a very long-term structural opportunity, and this theme can kind of help you achieve your long-term wealth generation kind of goals. So that's where we are. Of course, we'll get into the details. But before even diving into the presentation, first thing is, let me start with this. What is innovation? So when we say innovation, possibly what could come to many of you could be, some technology, particularly information technology. Many of us could think about information technology, like big things like AI, ML, and those kind of things, or possibly, certain new age businesses, so out of the world. Suddenly, something has come up, and it has to be totally out of the world, etc. So let me clarify. In fact, if you Google and see what is innovation in simple terms, simple words, I'll read it out. This is not my definition. It says innovation is about successfully implementing a new idea and creating value for your customers and stakeholders. Innovation starts with a new idea. It could be a plan for an improved product or service. It could be an updated method for running your operations. It could also be a new business model. So there are three things here. In fact, the Google definition itself talks about possibly new or improved product or service, number one. Second, it also talks about processes, improved or a different method to doing your business. Or the business model itself could undergo change, or possibly there can be peripheries to the business. You're getting into slightly different areas, and so on and so forth. So I wanted to clarify this to you, that when we are talking about innovation, don't just think about information technology from that perspective, anything to do with very, very cutting edge or very different stuff, and limit yourself to only that, or it's only about new age kind of things that we are talking about. This is slightly broader than that. So that's something that I wanted to draw your attention to first and foremost. So therefore, incidentally, in fact, this Google definition is something that I searched out in the recent past. But when we designed this product upfront, and those were incidentally the three different types of innovation that we are talking about, and even the portfolio eventually will be reflecting opportunities in these different types of innovation. One, as I said, anything to do with the product, service of companies doing it in a particular manner, or there is a particular business, but the same thing, the product is kind of delivered in a different manner. So that is one of the innovations, the product or service innovation part. The second is process innovation. So how you conduct your business, you make changes there to the processes, you find innovative ways to improve how you do that business. So that is process innovation. And last, the business itself, maybe you get into a completely different line, you spot an opportunity, you try and take advantage of that. Or probably you enhance your business into multiple verticals, again, get into newer markets, newer segments, and so on and so forth. So broadly, we're talking about, three types of innovation. Just to, make you connected, possibly, for you to relate to, I'll give you some examples, maybe even from the Indian context. For each of these three areas. So without naming the companies, obviously you'll be able to figure out what we are talking about. So first, on the product or service innovation, one of the examples that we put here is actually NBFC. Okay, so NBFC business is a very simple, very dull, boring business. You raise funds on one side by taking deposits or whatever it is. And then much like what banks do, you target a segment and then you lend out loans. So at the face of it, very, very similar to what banks do, and very, very boring business. But this is a company which actually innovated. So they had, kind of identified niche opportunities. Therefore, they used technology. They had huge data. They used, analytics on that data. And through that, they strengthened the risk management systems. They're very clear as to who they could lend to, what is the risk, and so on and so forth. since they were very, very strong about this part, about who they can lend to, including hopefully the micro segment, they were able to get into newer markets. Therefore, the product itself was kind of micro lending. So they got into no cost EMI. The loan disbursement process were very, very quick, and they got into small ticket loans. With all of these things, what happened was the benefit was the volumes increased several times. There was huge cross-sell opportunities. The customer acquisition cost was lower. And for customers, several benefits like obviously the convenience, easy accessibility, and so on and so forth. So this is a good example of a product or service innovation itself. So this is one of the examples. This company, 15 years back, a market cap was something like 10,000 crores. Today, they are in excess of 3 lakh crores. So you can clearly see the big benefits that can come, if a company tries to do things differently, innovates and does things, very differently. So that's one. This is another example where innovation has been done in processes. This is a specialty chemical company. Again, one can say that it's a very boring business where, you have raw materials and then, you process it and make the end output. But this company, in fact, in their stated objective, in their mission statement itself, they have innovation as a key differentiator. In fact, they spend a lot on R&D as a way of differentiating. And by doing this, what they've been doing is that they've been coming out with, they've been discovering various catalysts through their R&D, which actually helps them improve their processes itself. So these catalysts are used, during the process, and therefore, they not only cost efficiency, but in terms of their productivity, enhanced yields, and multiple other benefits they were able to accrue because of making changes, innovating in their process, and kind of benefiting from that. So this is not about a new product per se, but the process innovation, what can be done differently, and from conventional processes, they've done this, and they're a leading specialty chemical company serving both Indian and overseas markets. So this is an example of process innovation. The third example is business innovation. This is another company where you can easily relate to. It actually started as a restaurant review platform, but they spotted opportunity over a period of time. They've transformed their business model itself to now being a leading food services online platform. And even within that, they've been from where they started, they are now into multiple things. Customers on one side, the businesses on another side, and a completely integrated system where they run very, very deep customer loyalty programs, and at the back of it is a very, very integrated technology using which they're able to kind of identify different segments. They have a complete dominance in terms of market share. So this is a good example of getting into new businesses through again innovation. So innovation, what we're talking about is not just about a specific small area like a very, very different product or completely different things, but it can cut across products, services. It can be about processes and the business model itself. So so that's largely about innovation. So obviously the question is, everybody understands that there is a big need for innovation. If I ask you a question saying that should a company just be doing what it is doing all the time, or should they look at new ways of doing things? Should they look out for opportunities? Should they try and innovate from time to time? The obvious answer is yes, and there are lots of benefits for innovation. So you already saw how by identifying new markets, innovating to serve that market, a company grew very big. How a specialty chemicals company, just by making modifications to its processes through innovative measures, how it enhances yields, reduced its cost, and so on and so forth. There are multiple benefits for innovating. A few things that we have mentioned here, whether it is increased revenue or an opportunity to enter newer markets. But certain other segments, innovation, in fact, the entire segment of the sector could be undergoing a radical shift where you may not even have an option but to be innovative. Like, for example, the whole energy transition space, or automobile, for example, where things are from a traditional combustion engine, already a big transition is happening towards electric vehicles. So whether it is the original, the automobile manufacturers or ancillary providers, they will have to quickly pivot themselves towards this changing regime. And we will be interested in those companies which have a proven track record of quickly pivoting, the capabilities to do that, the wherewithal, the inclination to go that path. So those are the kind of companies that will make the cut as far as innovation is concerned. So what we have mentioned here is that just a sample of various technologies. As I said, when we talk about innovation or technology, it's not just about a few things like AI or probably big data, ML, and stuff like that. So we've just listed out some 10, 11 technologies, and these are not. This is not an exhaustive list. In fact, if you notice, even big shifts like energy transition that I mentioned to you about, or what is happening in the automobile, they're not even mentioned here. But so a lot of technologies, be it on the robotics or biotechnology, 5G technology, whole lot of things. And what we have also mentioned is that what are the different sectors or industries they have a impact on already, right? This is not something very futuristic already. Whether it is AI, the impact it has on manufacturing, finance, retail, likewise, let's say blockchain, for similar segments. So there are a whole lot of technologies, and it cuts across sectors. So that's the key point that we need to keep in mind. So technology actually provides opportunities to identify unique market segments, do things differently and transform the way in which you're conducting your business itself. So that's innovation which actually spans across sectors. Obviously, in terms of putting some numbers, innovation itself is not a new thing, right? Historically, as humankind has evolved over a period of time, we've always been, making changes, innovating over a period of time. But off late, what is happening is that in the current generation, the pace at which this is happening is very fast. What could have taken probably 80, 100 years today happens in a matter of 2-3 years. The business cycles are becoming shorter, so you'll have to be very adept. You'll have to be nimble. You will have to kind of make those transitions very fast. Otherwise, the perils of not doing that, so we mentioned a few things like 56% of industry leading companies at one point in time, they lost their leading position in the last decade because They did, they continued to do business in the traditional manner. They were not quick to react to changes. They did not innovate. So therefore, innovation may not even be a choice, especially in this current regime. It becomes a necessity, and those companies which are very, very nimble and quick to identify these opportunities and gain from them. In terms of their performance, this is a study done by BCG. They identified a set of most innovative companies and compared that with MSCI World. So these companies actually gave 17% higher returns. Obviously, the market perception in terms of the valuation they assign, the P multiples and other things also tend to be much, much superior, which is very intuitive. It's understandable that if a company is innovative, it keeps adapting, so they're likely to do much, much better, and that's what is kind of getting reflected in the valuations as well. So innovation has a lot of advantages. I don't think there is any dispute there. Not even a discussion around the criticality, the importance of innovation, especially in the current environment and in the days ahead, where changes are expected to proliferate, happen very, very significantly as we move forward as well. So just to give you some examples, I mean, globally, these are actually cutting edge technology, so to say, where it was something out of the blue, or something which did not exist. And, you do that kind of big innovation, you gain significantly. So you've given two examples, and, we can make out one is Netflix, the other one is your Tesla. So from how the business was run, it was a complete shift, and as a result, the kind of growth that these companies have seen is phenomenal. Like Tesla, for example, apparently their market cap is bigger than all the automobile companies in the world put together. So not only markets are acknowledging that this is the future, they also do believe that these kind of companies can continue to do very well going forward as well, because innovation is in their DNA. They're adept, unlike some of the possibly traditional car companies. Even though they can also do this, they believe that these kind of companies are so innovative that they will have this competitive advantage and edge, and therefore, they command a very, very high market cap and superior perception from the markets. So India, so you may not have, there may not be examples like a Tesla or a Netflix where you can say that it's been a cutting edge technology and it's been a significant transformation, etc. But having said that, even in India, a lot of things are happening. In fact, of late, in multiple sectors, I'm going to give you examples of 2-3 sectors where this transition is already happening big time. So many of the companies, sometimes, the entire sectors, or sometimes, within that sector, a few companies do that, reasonably better. This shift is already happening even in India. So innovation across sectors is happening. A few examples in the banking and financial services field, which for a good time used to be very, very traditional. Even some time back, we used to go to the banks, do traditional banking. From there, it's already transitioned to convenience banking. In fact, most of including the larger banks and many financial services companies are becoming technology kind of companies. They call themselves fintech, techfin. So that's the big shift that is already happening. In fact, many of them today largely use big data. So they have huge data on their customers. So they're able to use AI, ML to their advantage and intelligently figure out cross-selling opportunities, upselling opportunities. They're able to figure out their credit worthiness much better. All of these things are, happening big time. Even software from being at the site, it's on the cloud. So all of these things are already happening big time in the banking and financial services industry. Auto industry already, just a second. Okay, sorry. Sorry. So auto industry again, is already this EV transition already is picking up pace. You can see that between how it was even about 2 or 3 years back, we are already touching 1 million units of EV, and it is believed that in the next 5 or 6 years, the traditional combustion engines may be history. So that's the pace at which things are happening, and this has implications for the entire industry and the allied sectors, the ancillary providers, and all of that. So companies within the sector will have to be very quick to make those changes, and the ones that do them very well, those are the ones who are likely to gain significantly over a period of time. Likewise, so we talked about Netflix in the global context. So from that perspective, the transition from traditional media to OTT itself may not be seen as innovation, but this is a big change, which is shift even for Indian media. Already a lot of rapid changes are happening. Even Indian viewers, I'll tell you, are even my mother, they've been traditionally used to watching TV or consuming media in a particular manner. They've already shifted to OTT. Today they watch content at their own pace. Traditional advertising, therefore, has undergone a significant shift. And in terms of all these numbers that we have put through, in terms of the content that is getting created and how it's getting consumed, a whole lot of changes are happening. Therefore, a traditional media company, if they're not doing this big time, they may be candidates who will undergo slow death. On the other hand, those companies which kind of, even within the space, keep innovating about how they go about things, they will have a huge advantage as we go along. So coming to the last part of our presentation. So obviously we talked about two things as of now. One, the definition of innovation itself, where I said it may not be limited only to new age innovation or information technology in that narrow sense. It actually cuts across sectors. We gave you examples both from the global context as well as from the domestic context. I gave you some numbers while it's intuitive to understand the benefits that innovation brings to the table, but we gave you numbers in terms of what it means in terms of returns, in terms of valuations and stuff like that. So therefore, it is undisputed that innovation is critical. So our government also realizes this. So obviously, all of us, I'm sure, we are quite positive on the India growth story. So we are reaching a stage where not only in terms of our overall production numbers, even the productivity of that will have to be globally competent. Only that will lead to higher GDP per capita, and India transforming from being a developing economy to a very large and over a period of time towards a developed economy. Right. So for that, government is already taking a lot of initiatives, things like PLI, where the entire objective is to encourage manufacturing, to encourage research and development, so that the technologies can be better used, companies can be encouraged to be innovative. Therefore, the productivity goes higher. And import substitution. So, India, we manufacture all of these things ourselves. So, which is what is happening over a period of time. Some time back, you would have heard that the imports of laptops are banned. Already India has made a big, we've done very well in terms of electronics and mobile manufacturing, etc. Now the government wants that to happen even in terms of hardware and laptops and other things. So this PLI scheme, which is spanning almost about 14 sectors, with an outlay of nearly about 2 lakh crores, is very clearly at the belly of it has increased productivity, including spend on R&D and innovation. Likewise, there are several other initiatives that the government is pushing to foster innovation. The Atal Innovation Mission, that is AIM, is also something like that. There's more targeted towards startups and fostering innovation even at the school level, and small-sized companies, to encourage them to innovate and so on and so forth. But very clearly, the message here is that the government is also seized of this opportunity. They understand the importance of India becoming a manufacturing hub, and therefore the need to be innovative across different sectors in manufacturing, not just again limited to one or two. So very clear. So India itself has been making sharp improvements in the global innovation index. From a rank of 81 in 2015, we are already ranked 40. So we do think that we are getting into a level where a stage where India will make rapid progress in terms of our capability. As we grow, we will continue to find newer ways to do things. We will a lot of companies will find innovative ways to do things and capture the opportunity. So that's the context for the launch of this particular fund. While I did mention to you about the government side of it, as far as corporates are concerned, we've divided them into 4 different types here. And in a way, the portfolio also will make investments across these types of corporates or companies. So one, from the innovation perspective, there are global companies who have their setup here, and their setup could be listed in India. So these are MNCs. So the global standards, global best practices, something that has worked very well in a different market. So these MNCs, they set up R&D centers here, and they leverage the ecosystem to innovate and benefit from the global innovation network. So you will have a good number of MNCs.
Thank you so much.
Who are inherently very good in terms of innovation.
Welcome you all to the call
as
for
part of what they do.
This NFO, which is ICICI Prudential Innovation Fund.
They spend a lot on R&D. So
not taking much
so you will have a good number
ahead,
of these kind of companies. That's number one. Second, India's large corporates themselves, some of the large business houses, they also, have the wherewithal to innovate. So they've also been simultaneously setting up R&D functions. They have, reasonably good R&D budget, and sometimes, there are specific units within those large conglomerates which actually focuses on innovation and kind of identifying new opportunities. So typically, we are talking about large companies here, the large cap part of the market. In fact, when I come to the portfolio details, you will realize that why this portfolio will have a reasonably good allocation towards a large cap, already well-established companies. That does not mean that they are only doing traditional business. They are only doing business the traditional way. These are companies, on the contrary, who are extremely well placed to spend on R&D, to innovate, to identify new opportunities, and also invest to grow from that. So that's one of the sets of companies or corporates that we'll be looking at. There are there may be, slightly medium-sized companies as well, who may have identified a niche for themselves, and therefore, they would have, within that, they would have innovated to either be cost effective or, improve quality or improve their processes and so on and so forth. So those again can be good candidates, what we call as smart transformers. And of course, while this company, while this stock mutual funds will not be investing into unlisted space. Therefore, we may not be investing into startups and very small companies, given that this is a mutual fund product. But we do believe that going forward, we will have new sectors, subsectors, some interesting companies which will keep emerging. So some of them could be outright disruptors. So as and when those opportunities come, the young companies, as and when they show up, the fund can possibly consider making investments into. So largely, so you look at this. One is the large cap part of the market, which is the typically the 1 and 2 or the mid-sized part of the market. Again, 1 and 3, and to some extent, small cap, which is the 4. So I'll come to the product part a little later, but you will see that investments will be across sectors and across market cap, and I'm going to explain that to you. So introducing this fund called the Nippon India Innovation Fund. So as I said, this is a thematic fund where the endeavor is to identify and invest into those companies who we believe are ahead of the curve, who we have, who we think have the capability to make that changes, to pivot, to quickly take advantage of those opportunities, who we believe already have a proven track record of having done these things and possibly keep doing those things in the future as well. And in those companies where we believe they are likely to take advantage of the opportunities, as and when they show up. So from a market cap perspective, this fund, as I said, innovation. Sometimes, you may think that we are talking about, something new, something different new company which comes up, and therefore this will be very small cap and, micro cap. The answer is no. In fact, the fund will have predominant investments into large cap. We do expect the fund to have almost 65% in large cap, because most of the companies, the examples that I gave, some of the examples that I gave, both from a global perspective as well as from the Indian perspective, many of them are actually large caps. So these are the companies which are they already are into business. But again, as I said, that does not mean that they will only be doing traditional things. They will not think differently. They will not do anything innovative. The answer is no. So therefore, a good part of the fund, almost 60-65%, will be into large cap. Almost 30-35% of the fund could be in the mid cap. So many of the MNCs themselves may not be as large as some of the Indian conglomerates. So you will find a lot of mid-sized companies as well, fairly innovative. They operate in very niche markets and try and take advantage of things. So you will have good opportunities there. Small cap will be there, but it will not be much, maybe 10-12%. So small cap again, theoretically, yes, there can be a lot of companies which can come in, but as a fund house, as a mutual fund industry, we track the top 450, 500 companies. And you will appreciate that beyond 250, the 250 to 500 companies, they themselves are small cap, and anything beyond that, becomes very, very small micro cap, where the opportunity to invest, given the size, given the liquidity, etc., will be challenging. Therefore, our universe, even today, when we track, we track almost about 500 companies. So the small caps, if at all, those 10-12% of the portfolio will also come from that part of what we are already tracking. So please do not be under the impression that we are trying to, kind of pull something off thin air and, some startup and very, very small this thing which can become very big. And that's not what we are trying to do here. So investments will be across market cap in the way that I mentioned to you. Investments will be across sectors. So in that sense, even though this is thematic, in a way, it will be slightly broader than that, reasonably diversified. Having said that, it will not invest into those sectors and those companies which are outrightly into very, very mundane things, or rather, very there is scope for innovation is very less. Like, for example, a commodity business or maybe some consumer business, FMCG, etc. So those will be outright no, whereas many other sectors, it could be manufacturing, and within that, multiple types of manufacturing. We talked about specialty chemicals. We talked about even in the financials, there is a lot of scope for innovation. Pharmaceuticals, biotechnology, utility companies where a whole lot of energy transition is happening. So to that extent, it will be across sectors. But even within that, our endeavor would be to identify those companies which have, a good track record. Those companies we believe are better placed, and they can quickly make that pivot. So that's the approach towards diversification. Focus will generally be on high quality business. So this is in relative terms. So what we mean by this is that generally these kind of companies will not be, typically when you say value companies, they are like, they're cheap, they're out of reckoning in the market and stuff like that. Generally, the companies in the portfolio will be either when compared to market, P levels could be similar or even higher. So this portfolio, if you do a factor analysis, if you do a style analysis, you will realize that the portfolio will be high on quality factor, high on growth factor, and PE level generally will be higher than the market. So the reason that happens is that the market perceives that the future growth opportunity is higher. That presents both an opportunity as well as a risk. The opportunity is that if the hypothesis comes true, they grow very well, they grow very strongly. On the other hand, because there is an expectation of this high growth, there is also this risk that something can not work out in the near term, and there can be a fallout, right? So this is the investment strategy. I'm sure you will ask some questions later on saying that how it will be different from our other funds and how is it unique, etc. So the benchmark for this fund, so I'll come to that. So we are looking at the universe of Nifty 500, but when we did the scoping for this particular fund, almost 70% of the companies did not make the cut, which means that out of 500 companies, our universe itself will be close to about 150 companies. So this is across large, mid and small cap. So out of 500, almost 350 companies do not make the cut. So the universe itself becomes only 150 companies. So we do expect the portfolio to have, it will not be like traditional mutual fund 60-70 stocks. It may have 35-40 stocks. To that extent, it could be slightly, I wouldn't use the word concentrated, but it will not be like a traditional mutual fund having 60-70 stocks. But as I said, it will be fairly diversified across sectors, possibly because manufacturing is a big theme and a whole lot of things are happening there. Manufacturing on a whole level could be close to about 40-45%, financials and other sectors like, pharma, some energy companies, technology companies, all these things, are likely to be part of the portfolio. A few sectors may not find place at all. Like I said, maybe real estate, traditional housing companies and metal companies, some consumer companies, all of them would be outrightly not be there in the portfolio. The active share. So active share, as many of you would understand, is how the portfolio is similar or different from the market. So we expect the active share for this fund to be very high, somewhere in the range of 80-85. So what this means is that when we say 80-85, the portfolio is likely to be 80%, 85% different from the market. So it will be very different from your normal market index. When you come, a normal fund could have an active share of 50-55, whereas here we are talking about a very different portfolio altogether, right? So those are the things that you need to keep in mind. I've already explained to you about what kind of companies that we will look at. So companies having proven track record and investing in next generation technology platforms to disrupt business. They have a proven history of product process, technology, or business model innovation. Certain industries themselves which are undergoing technological change. So many companies within that could be candidates for this. You can think about auto or the energy space and so on and so forth. There can be business disruptors, what can be happening in the e-commerce, fintech platforms, and so on and so forth. So all these will be part of it. We talked about it. So we explained this. So typically, these are the characteristics of innovative companies. So, they have the potential for higher revenue growth. They can, command a large market share, particularly in a new industry, having a growth potential. And, if you do innovation properly, the margins can be very good. They generally tend to invest, on R&D, relatively much higher than any other company in the sector. Many MNCs could have access to global technology partners, and they may even have access to global capital. Some of the innovation themes, we already talked about it. In the early slides, I mentioned about some 10, 11 different technologies and how it's spanning across different sectors. So again, we've listed out some of the themes in decarbonization, energy transition, artificial intelligence, biotech, IoT, SaaS, manufacturing, power distribution, transmission. So a whole lot of these things, where technology is very high. Technologies are likely to undergo changes. Rapid shifts are already happening. So these are all the potential themes within this innovation theme. So largely that's what it is. So as I said, the theme will have higher active share, a relatively concentrated portfolio when compared to a normal diversified fund. And obviously, given that innovation is a focus, it will have significant focus on the innovation theme. Now, I want to also draw your attention to the fact that while it looks very rosy, very, very good, obviously, it does not mean that it does not have any risk. On the contrary, there are a lot of risk. The risks come from, I would say, two aspects. One is fundamental. So obviously, when a company is trying to do something innovative, different, as much as it could succeed and the benefits of success can be enormous, it can also fail, right? To that extent, it's a high risk, high return kind of proposition in itself, fundamentally. That's number one. Second is the P's, the valuations as such tend to be higher. So therefore, there is an inherent expectation that these companies do well, which is the expectation, and therefore, any disappointment there, and there can be phases where markets, when it goes through certain risk aversion, you don't want to pay so much for future growth. Rather, you will look at companies which are currently earning and stuff like that. So then, there will be a shift towards value investing than, this kind of investing. So those phases, it could significantly underperform. And the third aspect, as I said, since the active share the product itself is designed to be very different from the market. So the fund returns will be very different from markets. So you will find a phase where market is giving you, let's say XYZ return. The fund's return can be ABC. So therefore, please do not, think of it as an incremental product. Okay, the product can be very different. We do believe that it has a lot of potential, especially for the long term. Why we are saying long term is technically also something like new thing or innovation to take to kind of come through, it might take a little longer. So therefore, please consider this fund only if you have a very, very long term, only if you think that, India will go this path. We will be making significant shifts, and there are good companies which can capture that. And in our portfolio, if you capture that part reasonably well, there can be a meaningful differentiation. But please bear in mind that the volatility and therefore the performance, especially vis-a-vis the market, could be markedly different. So kindly keep that in mind. Therefore, we want this fund even for you as investors, partners. We do not want huge monies to come in during the NFO. You can give some money now, look at the portfolio after we build, look at the track record, and over a period of time, you can build. So that's the best way to go about it. Alternatively, if you're investing a good amount now, you will have to think about it from a really long-term perspective, like 5-7 years. We do not want a situation where you invest now, after 1 year, possibly this may underperform. I'm not saying no one knows how things can pan out, but we need to be mentally prepared. And that's something that we saw even in the recent past, till about COVID, before 2019-20. This theme globally was very, very popular. You can think about NASDAQ and the FANG stocks and stuff like that. They did outstandingly well for a period. After that, COVID also did very well till about September, October. After that, for almost 1.5, 2 years, this significantly underperformed. And the reason is it's not that the business models have, kind of gone, irrelevant or anything like that. It's just that sometimes, valuation, sometimes, the expectations of market. So those kind of phases can happen. Having said that, of course, now the market context is not that polarized. In fact, the last 3 or 4 months, this kind of theme growth has actually come back strongly. It has, in fact, last 3-4 months, it's moved up by 35-40%. So now markets are reasonably balanced out. So nothing extremely tilted towards this or value or anything like that. But generally, you need to keep in mind that all said and done, however attractive this theme may sound, it is a thematic fund, and therefore it's high on risk and return, and therefore you will have to necessarily think from a longer time frame and be prepared for higher volatility and intermittent movements. So with that, I stop. Thank you very much for your patient hearing. We really hope that you found the session useful. So with that, I'll stop and I'll hand this over back to Anjaneya. Thank you.
Thanks, Arun. As always, you've enlightened us with the detailed concept and conceptual understanding, and of course, building the confidence in the theme or philosophy or the topic of the discussion. So now I'm actually, rather than taking too much time, I'll just raise some of the questions which we have received from our audience. We have merged the questions which were kind of repeated in nature. I must tell you, like a couple of things you have already answered for the respect of the answer seekers rather, and of course for a little bit of clarity of understanding further. Once again, I request you to briefly touch upon these points once again for the better understanding, though the questions are probably kind of repeated as per the slides that you've shared and point you covered. So the first question is, what is the difference between NFO and any flexi cap fund? Yeah.
No, good question actually. So I did touch upon this in the presentation also. When you look at a normal diversified fund, including a flexi cap fund typically what it does is it invests across market cap, uh, and it tends to keep it very diversified. And the sector exposures will be given that this is a kind of a core or it's not a thematic fund. The allocations tend to be more or less similar to the market. So these funds, their expectations from a return perspective also, investors tend to have some kind of anchoring to the markets. So therefore, these funds typically, even if they take deviation, active share will not be very high when compared to markets. So if a set of stocks are the top stocks in the market, in the index itself, this fund also will make some kind of underweight, overweight position, etc. Not necessarily that these companies are, whether they are traditional, whether they are innovation and stuff like that. So therefore, their holdings will be kind of similar. Many funds have tracking error kind of targets, thresholds to take care. So they wouldn't want their fund to be very different in terms of behavior and therefore the portfolio also. So it will have difference when compared to market. But what we are talking about in this NFO is no relevance to the market. So our starting point will not be index or the market, and therefore how I build my portfolio, how much deviation I take, therefore how much active share I'm going to get, and tracking error that I could possibly hope for. On the contrary, it will be bottom up. Which are those stocks which are making the cut in terms of innovation, whether it is sector as a whole. Within that, what are the kind of companies? What is our hypothesis? Why do we say this company is innovative? And why do we think they're likely to be very successful in the future, and so on and so forth. Therefore, except for the fact that this fund also will invest across market cap, and I indicated broadly where it will be based on the current market construct. Also, this fact that it will be across sectors, most of the sectors, and then there are sectors that it will never invest into also. While these two things sound relatively, reasonably similar, but the construct will be very different. So some of the names, see, I'm not saying that you will have a completely new name, right? So again, as I said, those are the top 450, 500 companies. So you will find a stock in some other portfolio also, but the weight of that particular stock in this fund will be very different, right? So a normal fund, if it has, let's say 2-3%. See, for example, I'll tell you, manufacturing, engineering, the normal index will be 4-5%. Pharma will be 3-4%. If we believe that, like for pharma, for example, within that there are good companies where the scope for the innovation is very high. They're doing all the pharma, and this one could be 12-15% also. Likewise, manufacturing could be 30-35% also. So that way, it's going to be very different. As I said, we estimate active share to be as high as 80-85, if not more. So it's going to be very different.
Thanks, Arun. Moving to next, which is how big is the universe for innovation theme related opportunities in Indian listed company space?
Sure. So again, as I said, we have reasonably good space. A lot of companies in India are also quite innovative. It may not be cutting edge technology or something outrightly new, but there are lots of examples of how on an ongoing basis they use business either to as part of their process. They have higher spends for R&D. They're already forking out into different verticals and so on and so forth. As I said, out of 500 companies, nearly 150 companies are making the cut from a universe perspective. And from that, we'll be ending up making investments into maybe 35-40 stocks. So this is one part. The other part I did not, I somehow missed out. There is also a 20% provision in the fund to invest into foreign funds. We may over a period of time, provided the valuations and all other things are good. There are good innovation-based ETFs also available globally. So we have evaluated a few of them. In fact, we have almost frozen a few of them. So up to 20%, while the core of the product will remain Indian companies focused on innovation. There is also a provision of up to 20% investing in the global innovation space as well.
Thanks, Arun. That actually covers one of the question coming in a little later. So taxation part, while I understand it is a equity fund and with global exposure, so it's going to be equity taxation only. Correct me if I'm wrong.
Absolutely.
Yeah. Okay. Thanks. Moving to next, while innovation is all about new, but investing is also learning from the past. So have you done any back testing of this theme?
So we have done. We've looked at how our portfolios would look like. That's why when I'm saying active share and factor exposure, so we have looked at what would make the cut and therefore how the portfolio will look like and all of that. And obviously from a return perspective, again, had we launched this fund 3 or 4 months back, on hindsight, the fund would have done very well. Nothing that, so we're not here to time the market. So the team itself, the growth team and, these kind of technology related team started doing very well globally as well as in India. So had we launched this fund 3-4 months back, while the entire market did well, this team and, could have done very well. On the other hand, had we launched this somewhere in 2021, October or November, the last 2 years return would have been negative. Actually, despite the last 3 months, 4 months movement, the last 2 years return could have been negative had we launched it around 21. So that's fairly easy for many of us to figure that out. But now I think we have entered a space where, because COVID and after that, there was a big transition that was going on, right? At one point in time, suddenly all the high quality pharma and other things went up. And then there came a phase where, the value stocks, started going up. The other part of the market started significantly, lagging behind. But now it's more balanced. You have fair bit of all these extremes, having got settled down. So having mentioned about all these things, the reason why we are launching this fund now is not because we think now is the best time and therefore you invest now, the next 3 months, 6 months or 1 year your return will be very good because this theme look attractive from a valuation perspective or nothing like that. No. On the contrary, we are saying that, look, this is a unique theme. This portfolio is likely to be very different. It can, help in your portfolio. Hopefully, over a period of time, this can make a meaningful difference. Therefore, we think it's a very structural long-term story. Therefore, we think that this is something that you can consider adding to your set of funds. With the clear understanding that end of the day, it is a thematic fund. As I've been adequately pointing out that any thematic fund has that higher risk and return. And this theme, although I would say this is not a very narrow theme, this is slightly diversified. You will have manufacturing, you will have pharma, you will have, energy, auto, a whole lot of things will be there. But having said that, since the focus is more on innovation, the stocks could be high PE and stuff like that, there can be phases of volatility. So we need to be prepared for it.
Thanks, Arun. I'll move to next. In the interest of time, I'll take a couple of questions only, which are very pertinent. This is related to the PLI scheme of government. Is this fund going to benefit from PLI or any other initiative by government that can help the prospect of this scheme?
No, 100%. So in fact, as I said, the manufacturing space itself, and this cuts across, see, PLI is there for 14 sectors. So it is across, automobile, it is there for, mobile and pharma, multiple sectors are there within manufacturing itself, which is why we are saying that, and obviously the entire objective of PLI is to encourage both scale as well as the productivity improvement. There are lots of terms and conditions as to how you can benefit from PLI. So a good part of this fund is also likely to be invested into those companies and those sectors which will be direct beneficiaries of PLI. And we do expect that within this space, a lot of changes, including innovative changes, will be happening, and therefore very clearly we do think that this fund will benefit from investing into those companies that are beneficiaries of PLI. The other initiatives by government, the overall, the government's approach itself is towards, improving the ecosystem, the manufacturing, and whole lot of things are being done there. Like, the Gati Shakti program itself is like, bringing all the ministries together, laying out a platform, listing out all these projects, and improving efficiencies thereof. So it's a kind of a coordinated multiple kind of initiatives that government is taking with a very clear intention that India does not have a choice but to become a global manufacturing hub. There are a lot of opportunities there. You talk about China +1, you talk about Europe +1. A lot of companies are looking at India as a very, very meaningful destination. So look at the recent case of Apple setting up a store, manufacturing. In fact, it is expected that by 2029, 2030, India will be possibly one of the largest manufacturer of Apple phones, for the global consumption. So it is a vindication of not only India's capability to be a big manufacturer, and for that multiple things will have to be coming together, like logistics will have to be good, your cost will have to come down, overall resources will have to be available, whether it is physical resources or human resources. So India that way is transitioning very well, and so these companies realize that India is not only from a manufacturing perspective, they are also a big market. So they want to kind of have their facilities here. So what will happen in that? So you will have technology transfer, happening. So we are already talking about chip manufacturing coming into India. It could be done in collaboration with global leaders like TSMC or multiple other companies. But very clearly, government is realizing that we cannot be dependent on imports, whether it at one point in time, 2005, 2006, almost 100% of our mobiles were imported. Today, we are a net exporter of mobile and mobile accessories. The same is likely to happen in laptop very soon. So so a lot of things are happening, and I think as I said, we are already getting into a stage where India will go through a rapid transformation, and innovation will play a key underlying theme there.
Thanks, Arun. I can't avoid last two questions. I would request your brief answers to these two very pertinent, very interesting questions, I must say. While I'm taking your little extra time and everybody's, but let's respect these questions. As per your assessment, such innovation opportunities are more on large companies, mid-size or smaller. So, of course, what kind of companies, large, mid or small, while you touched upon it. But of course, from the making return standpoint, interesting question. Yeah.
So the portfolio, as I said, is likely to be more tilted towards large caps, maybe around 60%, as I said. Mid caps could be 25-30%, and small caps maybe about 10%. So theoretically speaking, a smaller company, maybe from a return potential, could be very high. So can be the risk. So therefore, we're not purely approaching it from a taking a very high risk, identifying very niche opportunity, and trying to invest largely into small caps. That's not what we are trying to do. Within this theme, which are those companies which are very well placed, and we think that the larger companies there already, either it could be their investments into R&D, they're already, diversifying into different areas of business. They have capability, they have financial wherewithal to, kind of do innovation, which may not be the case with many small companies. So therefore, that opportunity exists largely with large companies as well. The portfolio will be a reflection of that. And then, from a return potential, overall, this theme offers, high return potential according to us over a longer period of time. But at the same time, we will also have to be conscious about the fact that we are a mutual fund. We are not a very niche AIF. In our scheme, we will have all types of investors. Somebody is investing 500. Although we point out the risks adequately, there may be investors who will be coming in with reasonably small time frame. So we will have to ensure that the return generation also is reasonably balanced out. We cannot take extreme risks and kind of. So therefore, in a way, we will. It will not be appropriate to be into very small companies and kind of micro. So it will have a slightly larger tilt towards large caps, mid cap, and small cap in that order.
Thanks, Arun. Last one, very briefly. It being a thematic fund and coming at an all-time high market level with global headwinds possibly, it is going to be a highly risky investment. Is it a correct assessment?
See, obviously in this presentation, we have not talked about market. In fact, on market, we can go on for another hour where we can explain about multiple things and where we are. So we're not doing that. So obviously, from very low levels, markets have reached a certain level, and multiple things are happening globally in terms of interest rates, possibly kind of peaking out. The US possibly could have done its last, rate hike, and there is already expectation that over a period of time, the next few months, inflation will start coming down, and then markets will start expecting rate hikes to stop, and then at some point in time, cuts to happen, and so on and so forth. So there are different ways to see the market. So I wouldn't say that just because market is at this level, all-time high level, at any point in time, markets will be at a high level, right? 60,000 was a high at some point in time. 55 was a high at some point in time. So we will have to look at the possibilities for the future, how things are and stuff like that. So vis-a-vis the so I wouldn't completely agree with this point that we are at a very high level, and therefore, there are a lot of risks. There are also a lot of points on the other hand to say that a lot of things are kind of turning around and, looking for the better. So that way, having said that, independent of the market, when it comes to this particular theme relative to the market, this is a thematic, and therefore, it is high on risk and return. So that assessment, I would say, is right. And this has not got to do with the context of the market, right? See, for example, 3 months back, when market was at a certain level, when these themes had not performed that level, probably on hindsight, you could have said that, this looked very attractive, but that is on the hindsight. And even today, we may not know. That's why it's very difficult, and you should not attempt to predict and time from, whether it's for the whole market or for this particular theme. Should I invest now? Basis, the current context. Please think of this as we talked about the theme. If you think that, companies which are likely to do well on the innovation front, they're likely to do well fundamentally over a period of time, and markets will reward them over a period of time. And our ability to identify those companies through this portfolio, if you think, we can do that reasonably well. See, I'm not saying that we will be right all the time. We will identify all the companies right, but as a broad theme, and within that, if you do a reasonably good job, are you likely to make good returns over a period of time. If you think yes, please do look at this particular fund, but not from a timing perspective, right? So that's how I would respond to this.
Thanks, Arun. I must say this has been highly informative and slightly different from the market update discussion. Truly appreciate your thoughts and time. Friends, I'll just put my 3 bits only in very brief. First, this product now launch coming in from an AMC which does not believe in launching NFO. So it's not in the race of launching fund for the sake of bringing in. So it can be a very interesting idea when they are launching it. So let's look at it. It's an innovation. There's something different. Innovation is part of our everyday life, and we are getting an opportunity to make benefit out of it. That's one. Second, this timing of this product is also pretty interesting. I'm not sure if Nippon team has thought about it. We are in a way getting extended non-working days. And you would agree, being the professionals in this market and industry, we get maximum time share and attention share of our clients when they are when it is a non-working day. So we have 2 weekends plus 15th August and long extended period. So where the discussions can be very at a calmer side and a more attention you can get from the investors. And which is where my third point comes in. Innovation is one thing where which is actually related to our business or thought process, because we are not in the business of sales. We are in the business of helping client manage their wealth. So the meaningful discussion that we can have during these extended off working days, believe me, they will be in the right direction for our profession. So when we are in the wealth, help in the wealth side for the client, let's have discussions on the real market side and so rather than just sales side of it. So these are 3 bits I wanted to add. One is about from the AMC which does not believe in NFO. 2 is about the extended period where you can get attention. And third, professionally, we'll be doing something which is related to the wealth creation of the investors, not just pure sales. So these are 3 bits which I'm adding. Thanks, Arun, once again for your time share, and all the partners for your time which you spent with us, and of course extended by 15 odd minutes. We apologize for the extension, but I hope it's worth it when you are going to take this message along to your clients and get business benefit out of it. Thank you, Arun. Thanks, Team Nippon.